The next big trigger to watch is the earnings season that's about to kickstart in just a couple of days from now. It's our special segment, Quarter Se Quarter Tak. Reema is joining in to tell us what to expect from the IT sector. Reema, over to you.
Thanks so much for that. In terms of numbers, Q3 FY24 is likely to be another weak quarter for the Indian IT industry. Two reasons for that: weak seasonality, higher than usual furloughs, and then again, the continuation of weakness in discretionary demand. In fact, according to a CNBC-TV18 poll, 4 out of the large 6 IT companies are likely to report a decline in their top line, all except HCL Tech and LTIMindtree, where you will see a bit of a growth. Now, if you look at the numbers, the losses are estimated to be steepest for Wipro at minus 2.4%, dollar revenue down on a quarter-on-quarter basis. For Infy, down 1.5% to 2%. TCS will be on the flattish side. It's HCL Tech and LTIMindtree which will buck the trend. HCL Tech growth seen the highest at close to about 4%, driven by a Verizon contract, a very large deal that they had earlier won, an acquisition of ASAP, and seasonal strength in their products business. While LTIMindtree is also going to show the growth this quarter, and they'd already guided that H2 will be better than H1. Now, on the important subject of FY24 guidance, and it is possible that revenue downgrades continue. In fact, Kotak and Ambit expect Infosys to further cut the revenue growth guidance. It currently stands at 1 to 2.5%. They're saying the upper end of the guidance could be brought down to 1 to 2%. GS and MS, that's Goldman Sachs and Morgan Stanley, also see Infosys trimming or, just narrowing its guidance band to 1.5 to 2%. Basically, the upper end of Infosys' guidance of 2.5% comes down to 2%. If that happens, this will be the third guidance cut by Infosys this year. Even for HCL Tech, JP Morgan is saying that we expect the FY24 CC organic growth guidance to be cut by 50 basis points to about 4 to 5% for the services business and 3.5 to 4.5% for the overall business. Now, Wipro gives you a quarterly guidance. You're going to be watching out for the Jan to March quarter, and it's expected to be another muted guidance from them. The range is -1 to +1%. Now, on FY24 margins, the guidance by both Infy and HCL Tech is likely to be maintained, according to most analysts. Now, let's tell you what the street is focusing on. Well, it's going to be commentary on demand revival. Investors want to see signs of year-on-year revenue growth bottoming out. What will CY24 budgets look like? Are there any green shoots in laggard sectors like BFSI, telecom, high-tech? Also, this quarter has seen fewer large or mega deal wins, which dominated the narrative in the first half of the year. So the deal win number, the TCV number, could look lower on a quarter-on-quarter basis. If you remember, this was also the quarter where Infosys had announced that a large 1.5 billion MOU, which was signed by the company with a global client, got terminated. Very unusual for a company like Infosys. And on Q3 margins, for most companies, it will either be flat or higher, barring Infy and Wipro, where margins are likely to decline on account of wage hikes. And finally, on Wipro, there has been a lot of news flow on the HR front. Senior level exits continue, legal suits, reports of the promoter being unhappy with the CEO. But despite all this, stocks have done well. From the last quarter to this quarter, we're looking at a 3-month performance, and it's been a double-digit return for a company like HCL Tech. Even Wipro or even Tech Mahindra has actually clocked in a double-digit return in the last 3 months. So now on the subject of valuations, no longer very cheap, still not at the premium peak valuations, but it's a 27 times forward multiple for TCS, 23 times for Infosys, and for HCL Tech, Wipro, it's broadly in that band of 20 to 22 times. Now, in a nutshell, if you have to summarize, the NSE IT index has recovered nearly 24% in the past 12 months, despite no visible pickup in demand. So stocks have run up in anticipation of a demand revival. And I think this quarter, what the street wants to see, if not in the numbers, but maybe in the commentary, we hear from them about a demand revival, which will justify the run-up that we've seen in the stock prices.
All right, that's very, very comprehensive, Reema. Thanks very much for that excellent preview of what we should expect from the IT companies for the third quarter.